The scary reasons why Bill Gates is selling out his stocks. Hello and welcome back to Wealth-ology. For today's video, we will be going to talk about the scary reasons why Bill Gates is selling out his stocks. Let's get started. So we all know who Bill Gates is, right? He's one of the world's richest man with a net worth of roughly $127 billion. Now, he accomplished this by starting his own firm, Microsoft, but he also did it by investing wisely. So according to his most recent 13F fillings, he sold and decreased 11 stock investments while only purchasing one. Uber is a global alien corporation. He sold the entirety of his position. He did the same thing with Boston Properties, reducing it by 100% by selling 1 million shares. In his latest 13th filings, Alibaba, one of China's largest corporations, sold 100% of his position, going up a little, but these three stocks have been cut in a half. Alphabet or Google. He sold all of his interest in the same company. Amazon's Jeff Bezos won't be pleased with this one. 50% of the bill was decreased, and Melinda Gates' position in the Gates Foundation was reduced. Even the magnificent Apple was not immune to Gates's investing decisions, which resulted in a 50% loss. So these are significant moves by Gates. Typically, when one investor sells a portion of his position, it's a couple of percents. If it's 5%, people usually think, wow, that's a big thing. That's a large sale. However, Bill Gates is selling 100 of his stock stakes, including Uber and Alibaba, and 50 of his large cap stocks, including Amazon, Apple, and Google. These are significant changes. Do not be mistaken about this. Liberty Group, the telecom corporation, was decreased by a quarter, which is one of his smaller but still significant acts. Buffett's holdings in Berkshire Hathaway were decreased by 10.6%. So, I'm not sure how he feels about that. The sole tiny sale of 0.86% was made on Canadian National Railway, the last position to be sold. And if we look at all of the equities he purchased in the most recent quarter, it was only one, a healthcare stock called Strong Danger, which we'll talk about a little later. So, 11 stock sales and one stock purchase to recap. When we say stock sales, it's not a little sale or small discounts. It's 150% reductions. And as investors, what we really want to know is why. Why has Bill Gates made such large sales in such large corporations? Now, Gates and Buffett are similar in that they don't like to talk about their own investments. We only know about his purchases and sales because he is required by the law to do so. But like Buffett, Gates is a valuable investor who gained his investment skills when he was much younger. And you'll notice a pattern with many of the stocks he sold. They're all quite expensive, which many investors shun. Uber stock is now trading at $56 per share. It has a market capitalization of over $100 billion and is not even profitable. Amazon's price has increased by more than 400% in the last 5 days, and it now has a PE of 72, which is considered quite high. Apple is up more than 350%. 33 is the PE ratio. The proper name, Google or Alphabet, is up 170 points, with the same PE ratio of 33 as Apple. So you could say that Bill Gates believes these equities are overvalued. It's not like he's trying to get rid of them because he needs money. His net worth fortune is above $127 billion after all. If you look at a lot of equities in the market, you'll notice that their prices have risen to absurd heights. I'm sure Bill Gates and his investment manager, Michael Lawson, have been watching his market very attentively. And according to the latest news, they've decided to drastically reduce or abandon some of their assets. As you are all aware, the market has seen a lot of bizarre behavior. People appear to have a lot of spare cash, but what do they do with it? They put it on the stock market. Bill Gates disliked this irrational investment technique, comparing it to gambling. We don't think of the stock market as merely acting as a casino. We have gambling limits, he explained. So how do you detach social media from stock promotion? This is reminiscent of the 1930s in several ways. So with all of the craziness in the market, Gates says it reminds him of the 1930s, which Ray Dalio has also said. What occurred then was that you had the roaring 20s, when everyone was pouring their spare cash into the stock market because they believed it could only go up. But then, in the late 1920s and 1930s, one of the world's largest stock market catastrophes occurred. Now, consider the one and only position that Gates is purchasing, the drug discovery and material science business, Schrödinger. Schrödinger essentially uses computer simulation to design various medicines and therapies to aid in the cure of ailments. Computer simulation is also used to design various types of materials. It's fascinating that the stock Schrödinger is the only one in which he has decided to invest. Why not utilize computers to discover new drugs? They do so much for society these days. Why not use them to discover new drugs? We can conclude that Bill Gates liked this stock. Taking a look at this, it's a small corporation with a market worth of $5 billion, which is small in today's world. Bill Gates would have acquired them around the $70, $80, or $90 mark if they were currently selling for $76 a share. They're doing well in terms of revenue as well. As they search for new treatments, revenue has been gradually increasing over the last few years. As you can see, earnings are declining. And this is due to the fact that they are reinvesting every dollar in research and development. With Bill Gates' extensive knowledge and research in the healthcare area, this may be a company worth considering for our personal portfolio. When we look at his buyers and sellers, the main storyline is that he's selling 11 to 1 more than his buying. In 2018, he was questioned if another financial catastrophe like the one in 2008 might occur in the near future. Yes, it's hard to say when, Gates responded, but this is a certainty. Many people are wondering if that time is 2021, given the number of equities he has recently sold. Because let's have a look at some market figures for 2021. The market cap to GDP ratio, for example, is arguably the best single gauge of where valuation is at any particular time, according to Warren Buffett. If we look at it right now, it's pretty high. It's actually 80% more than the market's 0% equal fair value range. And the first thing that struck me was that it's far greater than it was during the 2008 financial crisis, and even more that it was during the 2000s internet bubble, which we all know what happened to equities after that. This indication indicates that prices are high. One possible explanation is that GDP has been fluctuating over the past year owing to the pandemic, and it may spike higher than the previous year. Nonetheless, the signal remains a cause for concern. The market's PE ratio, which is now hovering around 40 mark, gives a similar story. This is similar to the technology bubble of 2000s, but not quite as high as the housing bubble of 2008. Despite this, a market P ratio of 40 is excessive. If you examine the historical average, that equals 15, so it's more than twice as much. This is why Bill Gates' current portfolio is so conservative. His top 10 stocks, which account to 95% of his total portfolio, are value-oriented safe havens. Even though he sold some, Berkshire Hathaway remains his number one stock. Waste Management is next, followed by Caterpillar Conservative, Canadian National Railway Conservative, Walmart Ecolab Crown Castle, FedEx, UPS or Conservative, and Schrödinger. So, with the exemption of Schrödinger, which is currently his 10th largest holding, it is a fairly safe portfolio. We don't know how much money he has on the sidelines because he isn't required to reveal it. However, looking at his stocks position, we can see that he has an extremely conservative and cautious portfolio for these market conditions. When someone sells 11 stocks and only buys one, especially a wealthy investor like Bill Gates, who understands so much about the market and this new world, is someone we should keep an eye on in the near future. So, what did you learn from Bill Gates' ideas, experience, and strategies? Please let me know by leaving in the comment section below. And if you like this video, please press the like button, give it a thumbs up, turn on the notification bell, and subscribe to our channel for more. Thank you for taking the time to watch. Stay tuned for our next video.